Hey, good morning. Good morning, good afternoon, depending on the time zone you're joining from. Let me see. We have a little confusion in today's meeting. So I'm expecting some people probably could join a little later. Good morning, Aditya. Hey, morning, Fred. Uh,
Good
Abiya.
morning. Good morning, Vivek.
Hey. Um, Ameya, is this the first time or you're Ameya who I have met in person?
No, this is my first time.
Oh, okay, okay. I know of another person, Amiya, whom used to join, and we have also met in person. So I was just wondering if he's a returning person and a returning
No,
customer.
this is
Anyway,
my
so what
first
brings
time.
you here?
I mean, I have been trying to join this call. I guess this is the Saturday I got free.
Okay,
Uh, I mean, it is not. I mean, it has nothing to do with the topic. I know this is a series that happens every Saturday.
okay,
So
okay,
investing is one of the things that I'm looking at. So that's why.
okay, cool. Good morning, Morris. Lena is here. Jim, Jose, Candy. Is this your first time? And did I say your name correctly? Okay, then we have Morris, Sam, Saria, Veric, Veronica. I think probably Viv H. Hey Viv, are you a new one or you're a returning person?
Hi Vic, I'm returning.
Oh, okay. Sorry, might have missed your name earlier. All right, so welcome everyone. I know there was a little confusion around. I had earlier canceled the meeting yesterday. And then because I was not supposed to be here today morning, I was supposed to fly. I had a morning 10 a.m. flight. So I thought I won't be able to do the session. But then I think around 10 o'clock in the night, the plans changed. So I'm here and I had to cancel my flight. So I thought, why not? Let's meet again. So so thank you for, still responding and joining in. There was some confusion. You might have received cancellation, then, another scheduled meeting. It's all good. Great to be here like on every Saturday. We'll give a couple of minutes for others to join and we'll get started. Meanwhile, any new thing um, that you found this week in the market you want to talk about? What caught your attention? I mean, I do have a few topics. Oracle is one of them, which shocked the market. And of course, we look at a macro and crypto market and some of the news from there. Can look at a BlackBerry stock. I own BlackBerry. I've been an owner of BlackBerry stock since 2019. And it is one of my, I would say, the best return stock for me. So when I say best return, you'll be shocked because I think when I bought the stock was at $5 or something, and now the stock is at $3.50. But over last 6 years, almost 6 years, I have sold like tons of option premium in that. I think my cost basis is like now like 30 cents. So stock at $3.50 still becomes a 10 bagger. But I mean, BlackBerry, I got into it when they acquired Silence, but then eventually the acquisition didn't work out. Earlier this year, they spun out Silence and gave it to another company. I think it was a private equity company, Knight or something. The thesis behind BlackBerry is that they are very strong in now they have two businesses. One is a secure communication, another one is their QNX, which is around embedded software system for cars, etc. So their system is in almost 250 million cars, right? So and but the stock hasn't really performed because of all the issues that management have had in terms of an execution. Now they cleaned up their balance sheet. They wanted to move into cybersecurity, which is a very, very competitive segment. Eventually, they couldn't compete against the CrowdStrikes and the Sentinel ones. And now, good to see that they sold that business, raised some cash, and focused only on QNX and the secure communication. Still, I still have to see. I mean, if you look into the recent either earnings call or the analyst, not the analyst, but these guys. I think it wasn't JP Morgan's, but maybe Jeffrey's conference call. The CEO sound really good. They changed the CEO a couple of times, and now I think the John Giametta sounds really great. Looks like he has got the right direction, but I'm waiting for proof of execution, right? For me,
Yeah,
since my cost basis is so low and I can continuously sell premium to own it free and clear, I can be patient with it.
yeah, it seems like a good setup for a turnaround.
Yeah. But I mean, the setup seems to have been good for at least for past 12 to 18 months. Just that they haven't performed and Street hasn't recognized it. I think the other thing that we have to see, even if the business has changed, Street has to recognize and say, hey, the business has changed. I want to give it the multiple that it deserves, right? So both things need to match for the stock price. And for now, okay, so I was getting some background news. So for now, the business is moving in the right direction, but when the Street will recognize the value, that we don't know. Right? So that's a concern. But I can be patient. Like I said, I have a fees and cost basis, and I can be patient with this stuff while it performs.
So thumbs up fundamental.
Cool. All right, what else before we get started? So Adobe, I will bring Adobe for discussion. All right. TTD has fallen again 15%. Yeah, so I think TTD had downgrade from an analyst, JP Morgan, and hence it has fallen. But yeah, I'm not too worried about that. It's always been a pricey stock, so you can't have TTD as a big portion of your portfolio. But in the growth portion of my portfolio, it's a stock that I hold, and I think I'll still continue to hold it unless I see it, business really declining. There were two reasons why the stock fell down. Number one, I think one of the analysts downgraded. Number two, which I think is a bigger reason, and that may cause me to review my thesis on TTD, is Netflix decided to go with Amazon as DSP, right? So we know that Amazon has been entering into DSP space. It is already into DSP space, and that's why the TTD has fallen from $120 to where it is right now. But now, if the big brands like Netflix, etc., they can eat into the business, then we may have to rethink the TTD. But that was the news. So I still want to give it a few quarters, maybe a couple of years. And if it doesn't perform, it doesn't perform. You can't win on all the stocks.
Okay, thank you.
Yeah, but that was a reason on the TTD. Helena, it will be great to learn about stocks outside of tech in other verticals. We can talk about it, but I am not. I mean, I can only talk details about the companies or the stocks that I understand, and having spent most of my life, professional life on the tech industry, I understand that industry closer, but we also talk about e-commerce industry, right? So pharma is not my cup of tea, so I stay away from pharma. Biotech, stay away from it because that's more of a VC kind of investing. It's hit or a miss. And so, but if there are other sectors that you're interested in, yeah, do let us know. or specifically if you are interested in the companies, I think more than sectors, is if you want to talk about a company, yeah, let's bring it up.
And I want to talk about verticals, right? Sectors, so healthcare, pharma, right? Consumer packaged goods, etc. If you don't have expertise, no problem, but maybe there are others that have the expertise in these areas. Because I think we talk a lot about tech, and I think a lot of us are in tech. But
What would you like to know though
diversification,
about?
and we also talk about diversification other than when ETFs seem to be the fallback, but maybe there's like others that have expertise in some of these other sectors. It'd be great to have that included in these conversations.
Elena, what would you like to know specifically?
I want to know which ones are performing well. Like I work in tech, right, too. So I came here to learn more about like other
Do you have
sectors
like a
to
specific
invest in.
sector? Is there a
Um,
specific sector?
I'm open. I mean, healthcare is one that I've been looking at. I've been looking at like utilities and oil and gas and just across the board, but I'm just trying to learn more about things other than tech because I feel like I know tech really, really well. But I want to
Yeah,
know,
because
like, as I'm diversifying my portfolio, what other things
totally.
are hot? What are people looking at? What's trending? And what are the things that we should be looking at from a growth perspective? That's where I'm trying to get
I
information.
mean, I think if I were you, I would look at things from a macro perspective and kind of like even with the ETFs, like relative valuations. And then once you see like historically how the sector is done during certain conditions or like relative to other things, then you know when it's cheap or like when it usually tends to go up. And then once you kind of identify that, you can start drilling down to individual companies and then kind of, you know what I mean, like back testing.
So let me also answer, Elena. I think I did bring up healthcare or financials. Again, we don't do too much deeper dive into it because at the sector level, there is nothing much to deeper dive except the relative valuation with respect to S&P 500, right? So I did, I think a few quarters ago where I saw the chart of XLV versus SPY, which is like down 25, as low as it has been in last 25 years. So I thought, I'm now selling puts on XLV. I'm not doing any more bullish trades on the tech or on the AI sectors. All my bullish trades, I prefer to now do it on a non-tech sectors. But I don't do on individual companies because it's if I don't understand the business, let's say on the healthcare, I'm not doing puts on pick any healthcare company like Pfizer. I'm not selling put on Pfizer, but I do have a put on, let's say, XLV. Similarly, on the home builders, I've been building position in terms of selling puts on XHB for last what 2-3 months, right? 30 delta short put on XHB, XLF financials. I have a short puts on financials. But again, I'm not selling individual stocks, but these are those value sectors. I think also we talked about it when we was it 2 weeks ago where I mentioned these are the sectors that I'm gonna be looking at and be doing a bullish trades, which is one of the home builders, financials, because also if the interest rate goes down, these sectors will benefit. But that's sorry, go ahead.
I would just say, like, Elena, do you have like a process when you look at individual companies to decide whether you think they have good valuations or like whether you think their earnings are going in the right direction? Like, do you have a checklist you go through when you look at a company? Because I think that's also something that you can kind of implement when you're trying to pick individual stocks. But I think you have to look at the sector and the macro first.
Yeah, I'm just trying to get educated beyond tech because I mean, I feel like I know that, and I'm looking at what stocks have historically, gone up. I look at, what the market looks like, if they're having new products coming out, their leadership team, and there's a number of things that I look at. But I spend most of the time in tech, but I realize that tech is not gonna always be up, right? And you have to balance it with something else. And
Yeah,
I don't know if I'm convinced ETFs are like the thing always. So what I want to do is, I'm focusing on tech, am I missing out on opportunities in other sectors where maybe I should put some money investing in some of these companies that are, maybe up and coming or like that may be growing, and that's where I struggle. Like, what are those places to look? Because most of the focus is tech.
And some of the greatest businesses actually are in tech over the last 20 years, not just the stock price, but when I look at, let's say, a lot of other individual companies, and then I compare their, some of the metrics that I want to track. Still, some of the great businesses, from a business perspective, damn thing those are still on tech. But I hear it. I mean, I've gone through this concerns in my own head over many years, but then I decided to play to my strengths. And then on the areas where I want to use it as a little hedge or diversification, just stay with the ETFs, because I think you can't be an expert on all. So I just want to play with my strength and focus on individual companies in the industry that I understand, tech, e-commerce, fintech, etc. And for others, I stay with the ETF. If someone else, raise your hand or let me know if you work in a other industry and you can talk about that industry or can help us analyze a company in that particular separate industry. Let's say if someone is on a biotech, do let me know. Then we can, give you some homework. You can all
I think it's more about having a process for
Yeah.
finding good companies, because there are good companies in every sector, right? They're undervalued companies that have a lot of potential, but like, what's your process for like identifying that? And then like also, if you're gonna, like you said, look for areas that are good deals or like that are to kind of hedge yourself, then you have to look at the macro and like the past performance of the sector historically under similar conditions, macro wise. You know what I mean? Like it's more about like looking at how this, like that's why the ETFs are valuable, because you can tell when like it's cheap compared to every other sector, or like when it's expensive relative to other sectors. And then when you go to individual companies, then you can go through your process of like, do I think this is a good deal or it has a lot of potential for upside?
Cool. All right. So let's start with today's session. Today I'll be available only till 11:30. Then I have to drive and go and pick my kid because of some changes in program. Then my wife got tied up somewhere else. So I will maybe we'll break out into the breakout rooms at 11:30, and then I can be on a phone while I'm in the car. But let's try to finish the rest in another 1 hour, 10 minutes. Okay. All right. I think we have enough quorum. Welcome everyone to our discussion number 292, where we get together on Saturday, Investing Dojo, to talk about everything about investing as a retail DIY investors. So today, of course, I'll go through the macro, but on the equity side, I want to look at Oracle, because Oracle shocked Wall Street and the stock was like up 40%. So that's one topic we want to talk about. Also want to talk about Apple reveal, and then few of the companies that made big moves. And the industry side, we'll also look at a crypto market. And from investing education perspective, if the time permits, we'll also go through the buyback checklist, right? So a lot of companies do buy back their shares. And I've seen companies of all sizes and all life cycle buying back shares. And sometimes, it's a head scratcher for me. Why the heck is this company buying back their shares? So as an individual investors, I think you should have your own checklist when you're evaluating a company or their buyback actions. So I'll want to share some of the things that could go in that checklist, right? So that's on agenda for today. As always, anything that we discuss here is not a financial advice or investment advice. You do your own due diligence, find out what works for you, and if it works, just stick to it. Don't change it just because I'm doing something different. Stick to what works for you. All right, starting at a macro level, on the inflation. So last week I mentioned, this week the eyes will be on inflation. So we had a CPI as well as PPI numbers. CPI, consumer price index, it increased to 2.9%, which was um, in line with an expectations. But what Fed closely watches is the core CPI, right, which was close to 3.1% as it was forecasted. So inflation seems to be in control, even though it is higher than the Fed target of 2%, but still as what the market and was expecting. So there is no surprises over there. Positive surprise and good thing is PPI fell to 2.6%, which is well below the estimates of 3.3%. And I think the estimates were because the economists were thinking that the tariff impact will start to show up and the prices will actually increase. So we were expecting, the economists were expecting that it would increase to 3.3%, whereas the actual numbers came out to be really positive in terms of it fell to 2.6%, which is great. Now the bigger question is this that the tariff has not yet shown up, or is this how it's going to be? The company is going to eat up and probably, eat some of on their margins, or maybe they're able to squeeze their suppliers. We don't know. Or maybe the tariff impact will show up little in Q4. So I am waiting till Q4 to understand the real impact of the tariff, because generally you'll have a 3 to 6 months of inventory that the companies can exhaust before they start to raise prices or their own input starts to increase. So I'll wait. And also I think a lot of countries, we actually had paused the tariff, and the biggest one, China, is still under negotiation. So we'll see where it ends up. But so far so good. Market really liked the fact that inflation has not caused a negative surprise in the market, which would have been really bad for the market, right? On the other side, bad news for economy, good news for stock market continues, where we have a labor market is cooling down. It's further, we had a revision that came out for the 12-month period from March 2024 to March 2025. And this is what pisses me off. And the updated report shows that there were almost 1 million fewer jobs that were actually created than what was reported during this period. I don't know. We have like PhDs and statisticians, all of them working, and we can't just get the correct data. And we're talking about 1 million jobs here or there, right? It's not like the 10,000 or 20,000 or few hundred jobs. We're talking about 1 million jobs. And whole Fed policies based on the employment numbers and inflation. These are the only two things that Fed cares about. And we basically run the multiple trillions of dollars of economy based on the data that is flawed or that is inaccurate at that point of a time, right? It's crazy. We have seen these numbers even on a monthly basis, right? The recent numbers that came out on a monthly basis, it was what, 800K worth of a difference, and now we're looking at 12-month period close to 1 million jobs. So that means so far Fed is already very much behind. We thought that the labor market was strong. No, over the last 12-month period from March 2024 to 2025, labor market was not that strong. We had almost 1 million fewer jobs than what the data had indicated at that point of a time. Right? And this is why I'm like Fed is always driving, always making a decision, looking into a rear view mirror, because the inflation and the job data is already in the past. We're looking at for the past months. And now we realize that whatever was visible in the rear view mirror was not actually real. The situation was actually worse than this, right? Anyway, it is what it is. Jobless claims, initial jobless claims also rose higher, which clearly tells us that the labor market is weakening, right? So, which from labor force perspective, right? It's not a good news. People are either not being hired, or at least the claims that rose means people have been fired and now they are filing for their jobless claims, right? So companies are still waiting and watching to see how the whole tariff stuff goes around before they want to invest to hire more people, right? Either that, or hey, I got a AI or robotics or automation, and I don't really need this many people. Either of those could be true. But the fact is that the labor market has been cooling off, and now coming to the stock market side of the stuff, well, that's great for the stock market because that will give additional support to Fed to reduce the interest rate, which they should have done a while ago. If you look at, listen to our president is like, Jerome is always late. And looking at the numbers, if the number of jobs created were 1 million jobs less than what the data that Fed had, then probably they were late, but we'll see. So central bank is poised to start their interest rate cuts from this year. September, what's it, the next week is a FOMC meeting, and we should see a rate cut coming from Fed. Either it'll be minimum 25 basis points, but I think we saw it last week, at least 10-12% probabilities. We may get even 50 basis points rate cut. But now the bigger question is, has the market already run up in anticipation of rate cuts? Is it priced in, etc.? We don't know. We only get to know after the rate cut happens and how the market behaves. Yeah. So far, market has done really well, right? There is nothing to complain about the markets if you look at, and let me bring let's bring up SPY. We are up like 12% for the year. Right? And if you're on the tech side, you have a better day. We are close to 15%. Right? So markets have had a good run up from a year to date perspective. And if you look from the bottom of the April, oh my gosh, if you had bought it here at the bottom, you're already up close to 50% when it comes to QQQ, like close to 45%. And even on the SPY, I think we're up 25% or something. It's been a great run for the markets. And looking at the history, this is the third consecutive year in which market has done so good. Right? 2023, we were like 24%, 2024, 26%, and now we are looking at close to 12%. Again, we still have, I know there are still 3.5 months to go, and anything can happen in those 3.5 months. But so far, I mean, all the chips seems to have been aligned to tell us that probably we're gonna go higher. Again, I don't have any prediction powers. No one has it. Don't have any crystal ball. But given the fact that if inflation doesn't rise, because one of the concern was you have a worsening labor market, and your inflation is rising, and if your GDP contracts, we probably get into the stagflation stuff. And if we don't get the stagflation, we have deregulation coming in, and the tax rates, the cuts on the corporate taxes, extension of that. So there are a lot of good stuff that is yet to show up into the market and into the economy. Right? I think the bigger concern was the tariff stuff. And if you don't see inflation from tariff, then that huge draw on the market, that's gone. So I can short the market. I think when we looked at the Howard Marks InvestCon, right, in which I think InvestCon 1 was short the market. I'm at level 5 wherein, I still think there are sectors of the market that probably will that have not performed and could do better with the lower rates, right? Be bullish on that. Are there any sectors in which I would like to not add more bullish positions because of either already have it or those sectors are already run up? Sure. But I think overall, I'm still positive about the market. Right. But it is possible that, once I say the statement and next 3 months we get a negative market. Who knows? But this thing seems to be aligning. I can't say about any specific company or a sector, but overall things seems to just go fine. The tariff has not impacted the inflation as of yet. If the inflation number turns towards, it paints an ugly picture, and then that pulls the Fed back, that probably will cause a lot more turmoil in the market. Right now, market is already priced in that we're going to get a rate cut in September. But if we don't get it, then all bets are off. Okay, the bigger question is, so I think so far Fed has so this chart shows you what the Fed has told in terms of what the interest rates would be, or how many cuts on interest rate should we see it, versus what the bond market is pricing in, right? So we know there's a bond market is bigger than the stock market, a lot more astute, more intelligent investors. They're actually trading the bond market, and bond market is telling us that the rates will be below, and this blue line that you see is a bond market. Bond market is telling us that the rate will be below 3% by end of 2026, whereas the Fed is showing us that their dot plot that tells us that it's going to be 3.6%. So we'll see whether Fed turns out to be right or whether the bond market will be right, because bond market is saying, looking at the conditions right now, I think Fed will be compelled to cut the interest rate to below 3 by December 2026. Fed could always revise their dot plot. This is again the greatest piece of technology that I can't wrap my head around, is the Fed governors, they come up with their something called a dot plot on their beige book, in which on a chart they put a dot saying this is, I think, where the interest rates would be. Of all the trillions of dollars that we spend on technology, we run the multiple trillions of dollars of economy on a dot plots, right? So this dot plot shows that it's around 3.6%. Fed could revise its dot plot, and I think we will be looking at the updated dot plot from Fed after the FOMC meeting, but this is based on June. So we'll see who turns out to be right, whether it's going to be bond market or whether it's going to be the Fed. Right? Now coming on to the equities side. Oh, sorry, anything else on the macro? Anything else caught your attention? Sam is asking, can you expand on AI increasing SF Bay Area rental prices? I mean, it's not AI increasing, but it's possible that if you're paying like $1 million salaries to the guys just, with the 2 years of experience, they can afford to pay whatever the landlord asks, right? So, okay, Jose has already mentioned that, right? AI companies pays their worker a lot. So generally, otherwise, AI would be deflationary. Use of AI in your operations is going to be deflationary. I mean, the technology has always been deflationary. It always reduces the price of the goods, or even if it's the same price, it will give you more features or more benefits. So tech is a deflationary. Okay, all right. So let's move on to the equity side. Oracle. So if you are invested in the stock market, and unless you like turned off your computer and never looked into the market, there is no way you would have missed that what happened with the Oracle stock in this week. Any Oracle stock owners? Let me ask that. Who are the lucky people? No one owns Oracle? Elena says yes. Cool. Good. Congratulations. I'm asking for people who owned Oracle before the jump. Oh, cool. Good one, Ravi. Great.
The Oracle stock is not, it's not surprising. Like they're becoming a number 4 cloud player, right? It's like, it's Amazon, right? It's Google, and it's Microsoft, and then Oracle
know.
has just done a huge contract with OpenAI. So it's not surprising that their stock is rising. Their Oracle Cloud is going bigger, and they also have a healthcare play as well. So they're becoming like a player that they were not part of, but they're becoming a strong player as a number 4 in the market.
Yep, I think that was what my thesis was. And then I also want to tell you one story, which is reason not to sell a stock. So I think last week during the breakout room, I went through because someone asked, I don't know who asked the questions on. We talk a lot about when to buy a stock. Look at if you're at TA, you look at whether all your lines are intersecting at the right times. Whether your moving average is pointing in the right direction, whether a support resistance, whatnot. Right, pick up whatever your favorite study is. And if you're a fundamental investor, you look at, I'm getting the right PE ratio or price of free cash flow, whatever the metrics that you want to look at, right? We spend a lot of time on how to buy the stock or when to buy, but we don't talk about reasons to sell the stock. So last week during the breakout room, I went through the reasons to sell the stock. Now I want to tell you the story. One of the reasons of not to sell the stock, which is what I should have listened to my own self in 2022, I guess. I think we talked about Oracle when one of my ex-colleague who had joined Oracle had reached out to me for opening, but I was not looking for jobs. So I thanked him. So he was working on an OCI, and then I'm like, okay, they're growing their team. Then I started looking at an OCI, and they signed up some marquee customers like Zoom, etc. And that time, I think Oracle was trading at $45. So I started position at Oracle on that, and I think talked about it. Keep an eye on it, Alina. Exactly the use case that you presented is this is the number 4, and no one talks about number 4 just yet. So let's keep an eye on that one. So that was my thesis. And I had bought those Oracle shares on my Robinhood account, which then I decided, I don't want to. I opened Robinhood account because, many people in 2021 came to in stock market through Robinhood, and then they had a question on how do you do this in Robinhood. I have no idea if I don't have an account. So that's the reason I had opened an account, and I said I don't want to stretch into like multiple brokerages. And I was cleaning up my Robinhood account. I sold my Oracle shares. So one reason of not to sell the shares is because you're changing a brokerage account, right? I should have just transferred the asset, but it was like I think only a two companies in Robinhood. I'm like, who gotta go through the transfer of asset form? I just sold it with an intention. I'm gonna buy it in my TD Ameritrade account, which never happened because once it was out of my sight, it was out of my mind. Then when I looked at it, it was already like 125 plus, and it becomes extremely difficult on, oh, okay, maybe I'll wait for it. And I never did a deep dive into Oracle, and now it run up to what, 300 plus, right? So reason of not to sell the stock is, hey, I want to clear my brokerage account. So which is what the mistake that I did. In any case, OCI, and then of course in 2023, this AI play came in, and the Oracle, the stock just took off. What happened this week on Oracle and what shook the market was this chart. So this basically tells you the RPO, which is remaining performance obligations. Right? And this was like the chart shows you that it's like $455 billion, right? As compared to $99 billion a year ago. From $99 billion to RPO increasing to $455 billion. All the analysts were simply shocked at this number, right? So when I listened to the earnings call, and it was very clear that no one in the Wall Street had expected that the RPO will be such a huge number, right? And that's what caused the stock market to jump. If you really look at the current quarter result, revenue was below estimates. EPS was below estimates, right? And the guidance was not that great either. In that case, you should generally market is, has not been forgiving recently. You could see a company stock losing 10, 20% because you missed your top line as well as bottom line. Only thing that worked in Oracle favor, and this is how Safra Katz, she started the conference call is with bringing up this number before she talked about the current quarterly results, is that we have an RP of $455 billion. So that caused a huge jump in the price of Oracle, right? It was trading close to 240 and boom, it's like the highest was like 345. I think at some point of a time it was what 45% higher. And then I was looking at the results. And I think one thing which I think I also tweeted about it. So if you look into the RPO, right? RPO generally consists of two things. So let's go back here, right? One is a deferred revenue. Means this is the revenue this is the you already received the money from your customer, but you haven't yet delivered the services, so you cannot recognize the revenue yet. That's why it is called the deferred revenue, which shows up. It will show up in your balance sheet. So when you take a break, do the breakup of this RPO of $455 billion, you will see that the deferred revenue this quarter is only $12 billion. It means 90%. So if you analyze it to 12, to analyze it to be whatever, 48 or $50 billion, it means 90% of the RPO is coming from backlog, right? So backlog will tell us I've signed a deal with a customer. Let's say let's say you and I enter into a contract. I've signed a multi-year deal with you and saying by the end of 2030, I'll pay you $10 million. So you can include that $10 million in an RPO. But for the year 2027, when you're invoicing me, hey, do only $1 million. So I'll pay you $1 million at the start of 2026. I'll pay you $1 million at the start of 2026. So $1 million will show up as a deferred revenue. Okay. I know I'm getting a little technicalities, but it's important to understand. So when I looked at this, I'm like, wow, 90% of this jump is based on something they've signed a contract, but those contracts could be modified because you haven't yet invoiced the customer. If you invoice the customer, it goes into account receivables and all that stuff. So before you invoice the customer, your account manager will make sure that the customers are agreed to receive the invoice and will be paying for it. But when it comes to the backlog, yeah, there are ways to get out of a contract. There are ways to renegotiate the contract. There are ways that if their customers is not in a position to honor the contract, it could go back down to whatever. It could become half. I mean, I have had a few contracts in which we had to get back to customers, and in some cases the value became zero because customers like, I can't even do it. You can fight it out in the court, but companies won't do that, right? So I heard like 40%, 45% jump on 90%, which is not a done deal. For me, it was too much too soon, right? So I did my first option buying trade of the year. You guys know I'm mostly a sell. I bought a put option on Oracle because again, this was from my perspective. I thought why the market is not recognized or ignoring the fact that the 90% of this RPO is not baked in. It's not a done deal. Anyway, so if you dig deeper into $455 billion of RPO, $300 billion is coming from OpenAI because they signed an agreement of $300 billion with OpenAI for the services to be provided till end of 2030. So this goes all the way till 2030. And the deal with OpenAI doesn't even kick in from until it's 2027, right? So Why is market not looking at that? Number two, when you look at an OpenAI's projected revenue, I think, is only $12 billion. And I think if they have to, I'm not saying that they won't be able to, but it seems a very uphill battle for OpenAI itself to actually be able to pay $300 billion, right? So there is some level of risk which is involved. It is not a non-trivial, it's not a trivial risk, right? And number two, OpenAI is having its own issues in terms of trying to raise funds, and they have their own corporate governance issues, trying to convert between profit, for-profit and non-profit stuff. You guys already know. And third is Microsoft, which is one of a big customer and also investor in OpenAI, is also looking at some other tools, right? Also, Microsoft has first right of refusal for any capacity from OpenAI, right? So if OpenAI says they got X amount of capacity available, Microsoft can come and say, you know what, I'll buy all of yours. If that happens, how will OpenAI gonna service Oracle? So looking at all these things, I realize it's not a done deal yet, guys. But market is priced in as if this $455 billion is all going to flow into their revenue, right? It's all baked in, it's all done deal. There are no risks to it, which I thought wasn't the case, because the deferred revenue is only $12 billion, right? Out of that 455, annualized, it's $50 billion. So 90% of the $455 billion has a risk in it. So my reading was that is too much too soon. And like I said, for the first time this year, I actually bought a put option on Oracle. But the problem is now I don't know where to sell it. So the market, Oracle went down, and I sold it. If the Oracle, the stock would have continued to rise and I lost that money, so be it, right? But yeah, sometimes you get these crazy moves in the market, which when you dig deeper you realize what. But and Larry, it's like a case of two companies. One company says, I don't have $300 billion dollars to pay you, which Oracle, the OpenAI doesn't have right now, of $300 billion to pay you. And Oracle doesn't have a capacity to serve them for their workloads worth $300 billion, right? But both of them signed an agreement. So we'll figure it out, we'll do it. and the market is like, the stock was up like 40% on that one. So we'll see. We'll see how it goes. Hopefully they'll figure it out. But just 45, if the stock was up 20%, it's okay. I wouldn't have gone negative about it, but the stock was up like 45%. I just couldn't digest based on just based on just RPO, right? Overall, Oracle results, if you look at it, pure quarter-over-quarter perspective, yeah, they grew 8%, right? Sorry, the revenue grew 11% year over year. Not shabby, but not as great as sometimes Nvidia will grow like 50%, right? It's not a bad quarter. Their software revenue actually had slipped. It's all about the growth story on their OCI and the demand that they are seeing from OCI. When I say demand, it means the customer that was signing the contracts with them. The bigger question is, if, like say, 2 years down the line, we figure out, oh, this AI has not worked, the bubble burst, how many customers will still be able to honor that commitment on which this $455 billion of RPO is based out of? That's my whole story on the Oracle, which I was not able to digest the fact that the 45% jump was actually reasonable first, and number two, it's sustainable. Okay? So I'll wait. Maybe probably, maybe initiate another position in Oracle once it cools down a bit. But that's my story on Oracle. Looking at some of the other numbers, so one good thing that he did for Larry was Larry became the world's richest person uh, for a day. I don't know where, after I think Oracle has corrected a little bit from 345 to 292, where he is right now. But yeah, it made Larry the richest person. So the results are okay, not too spectacular, but at an overall level, because I never done a deep dive, so I don't have the numbers around the cloud revenue or the AI workload revenue. I think that is growing at a much faster pace. Probably, I think the conference call she mentioned about 45% to maybe 50%. I think that's what the market is pricing in. And yeah, it deserves some premium for it, but not 45% high. Yeah. That's a story on Oracle and how I viewed it based on this quarter. It signed 4 multi-billion-dollar deal with 3 customers. I think there's NVIDIA is in it, AMD is in it. Of course, OpenAI. Cloud revenue was up 28%, whereas the software slid by 1%. Infra revenue is on track to grow to $18 billion this fiscal year. Can you imagine, from like overall revenue perspective, looking at annualize this, it become a $60 billion. From a $60 billion to looking at $120, $130 billion. Not impossible, but it's not an easy path for Oracle. Anyway, so you do what you want to do with your stocks. Okay, but for me, this 45% jump was too much too soon. Any other comments on Oracle? What did you think about, especially those who own shares of Oracle? Any
Say for
comments?
me, I'm gonna spend some time watching them because if you look at their website, they're hiring a lot of people for cloud, et cetera. So they haven't built out all this stuff. So some of it's speculative, right? And they're making commitments to build the future and they have to succeed on that. But they are signing very big companies and they're capitalizing on people that want alternatives. They're the cheapest option of the clouds. And I'm seeing more groups go to them, and they're helping fundraise for some of these groups through like AMD Ventures, et cetera. So there's a lot of like extra perks that these companies are getting working with them, but they still have to prove that they can build out their data centers and all the things that these companies are investing in for the future to be successful. But I think a lot of it's speculative, but it looks like they're going to be the number 4. They're going to be like Google Cloud, who came in as number 3 and is gaining. They're going to be the 4th option because the other clouds haven't been as successful. So if they keep going, they're going to try to take market share from the top. But everyone's always looking for alternative, and they're the cheapest of the cloud so far, and they're flexible spending where the other clouds have a lot of lock-in. So that's why people are going with Oracle Cloud.
Cool. No, thank you for the summary. And and maybe there is a place for 4 cloud players. Who know, right? Only time will tell whether these 4 can succeed and grow at the. I don't think they can grow all at the same same growth rate, unless the market is growing much faster. But maybe there is a place for all 4 of the players. So own all. I mean, I already have positions in 3. I own Google, Amazon, and Microsoft. But the other big thing is, hey, at what pricing do you want to own this? So that's on Oracle. And I think Oracle also doing a big push on a verticalized cloud solutions. Right? They bought the Centene healthcare, spent billions of dollars, or maybe they want to. They also have TikTok, they have Zoom. Who knows? I think, but I agree that hey, doesn't harm to maybe get the 4th one, in your portfolio. Okay, the other big movers that happened in the market was Arista Networks that fell down 10% or 9%. I didn't see any specific news around Arista. So they had their analyst day. I've yet to listen into the analyst day. I was almost, uh, non or wasn't paying much attention to the market on Friday. So I really don't know what happened here. Has someone tracked? What did they say in on their
Vivek,
analyst call?
Vivek, I think the rising tides of Oracle because Arista is the major supplier.
No, but Arista actually fell down.
No, it rose, right? Didn't it rose?
No, it fell down on Friday. I mean, the idea I'm talking about this, there was almost 8% down on Friday from close to 150 to 140. And I was like, if you look at the news, basically all the Wall Street analysts have upped their price target on Arista. So I'm like, why? So I couldn't wrap my head around it, but I did not have time to get into the details. Maybe they would have said something in their analyst call that would have caused this short-term correction in the stock price. I know I mean, as per the last earnings call, they were basically reaching their target of the overall, I think, revenue as well as AI revenue a couple of years before what they given the guidance earlier. But maybe in an analyst call, they could have tamed down that expectation. I don't know. But maybe we'll see next week once I go through it to figure out what happened. So that was one, Arista Networks. I own this. Another one was Synopsys, right? SNPS. So Synopsys is basically provides the EDA, electronic design automation software, which is used by the companies that design the chips like NVIDIA, etc. And that while Oracle saw a jump of 45%, Synopsys stock was down like 35% after the earnings announcement, right? So I jumped into it. I mean, I looked at the stock and looked at the earnings. I couldn't find the reason why the stock fell down was the management mentioned that because of these export restrictions in China, they see an impact on their guidance that they had provided earlier, and they walked back on their guidance. But management also mentioned that they are basically are being a little more conservative in their Q4 guidance, right? And by the way, I mean, I looked at both the Cadence and Synopsys last year. The businesses are decent businesses, right? There's to hold in terms of their revenue growth or free cash flow, etc. But now looking that the stock was down 35%, and I was a little interested in that, so I did a trade on this one. This is once in a while when I get a chance, you'll do this swing trades, right? Even though I have right now no intention of building a real position in an AI driven company, but this drop was too much. So I did a trade on this one, assuming the fact that the whole China the stock fell down because of the concerns around the China, and we still don't know, right? The fact that the discussions are still going on, and maybe if US could walk back and basically tone down some of these export restrictions that we are putting, then that would bode well for Synopsys. Anyway, so that was one big reason why the stock got crushed. Which are other move? Paramount, Skydance, and Warner Brother Discovery. This is one rare cases when you will see a company that is acquiring another company, generally you will see that the acquirer stock goes down and the company that is being acquired goes up. In this case, both of them were up. So again, generally you will, FTC will block these these deals, but with Larry Ellison friends in White House, who knows, this might go through. And Larry Ellison's son is basically, I think he owns Skydance or something. So that was one. Other one is Adobe. So Adobe reported results. I think it was a beat on both top line and bottom line. But the stock had fallen down after the results because of the concerns that AI is gonna eat Adobe's launch. Any Adobe shareholders? I don't own Adobe. Out of the stocks that we discussed, I own only Arista Networks. Any Adobe? Okay, Shri says yes. Any other Adobe shareholders? Oh. Okay, so I think that the current results were good. Or maybe I have a chart for Adobe. Okay, yeah. So I was looking into and trying to do a reverse discounted cash flow to look at Adobe and see, overall it's a decent business, right? They've been growing like 10, 12%. Let me just pull out rather than trying to grab. Yeah, it is 10% consistently quarter over quarter, right? So it's a decent growth business. I mean, similar at what Oracle is growing. And overall, if you look at it, it's a good cash flow business. I think from a business metrics perspective, the current business, there are no concerns. It's a pretty decent, well-established business. So I think the stock is responding to the fact that the future is going to be very bleak for it. And that's where, so I looked into and figured out what's being priced in. So over the last 4 quarters, they've done close to $9.4 billion of free cash flow, putting a discount rate of 10%. And if I say that expected growth rate in a free cash flow is 10%, right? Which over the past 5 years, they've been growing their free cash flow by 14%. And I'm saying, hey, let's just say even if they do it at a 10%, still the stock from that perspective is underpriced. Okay. Now the bigger question, and I'm not taking into account that Adobe is that they uses this free cash flow to buy back the shares. So I think this year probably they're gonna buy back around 3 to 4%. Over the last 12 months, they bought back 4% of their shares, right? So which also increases your free cash flow per share. I've not even taken that into account. All thing that I've looked at is you're growing your revenue 14% over the past 5 years. You're growing your free cash flow 14% over the past 5 years. And I'm assuming that for the next 10 years, you're gonna grow your free cash flow at 10%. Right. Just with that, the stocks comes out to be at much discount to their the valuation perspective, right? Now, what I don't know about is the future. Maybe market is pricing in that the AI is going to eat their lunch, and whatever growth that they've gotten over the past 4-5 years of 14% or 10% is going to trickle down to 5%. Possible. I don't know. Maybe we can run the numbers and see, but to me, it looks to be a pretty reasonable valuation. And if also look at the analyst projection, they're still projecting revenue to grow by 9.26%, right? 5-year projection. So analysts are expecting it to grow to 9.26%, so growing, and EPS to grow at 21%. So assuming that the free cash flow will grow by 10% is not that far-fetched. So this may be a stock in which at this price point seems interesting to me. Right? Will it be able to change its like form again from a licensed software, it move towards a cloud subscription? Now can it use AI and fend off all these new competitors that we are seeing? That's a big question. I think only time will tell. Right. Shantanu had done great work with Adobe over the last 10 years in changing its business model, but now can it also run its magic and compete against some of the upcoming companies that just use AI to make all the changes that you need to do in your what Photoshop can do, right? That's the biggest question, and I think that's what the street is just treating it as that it's in trouble, right? Looking at the past seems to be very undervalued, but you need to know if the management can't compete against these AI tools, then yeah, there is a risk. But right now, this seems to be at a pretty decent valuation. So that's on Adobe. I know someone had a questions on Adobe. Rutva Patel say Fig is eating into some of the Adobe business. Yeah, that's a concern, right? Figma, and they tried to buy Figma. FTC blocked it, so they couldn't buy it. But the bigger question is what Figma has done. Can Adobe do it? Or number two, is market discounting the impact of Figma a lot more than what actually it would be? So I would rather buy on buy Adobe here than trying to buy it at like a year ago. Right. So those who were held the stock at a year ago, if you were bullish then they should be double bullish. I mean, I was not bullish there, but right now it seems to be again, I'm not saying it's free of risk. If they can't compete against these AI players, you could see that correcting again. Who knows, right? But a lot of bad future is being priced in. Aditya asks, is all their revenue from Photoshop? I don't know. I've never looked into Adobe as a stock for a deep dive. I just did this only when I saw that Adobe is trading like where it is right now. I thought maybe let me just run it and see from a valuation perspective. Okay, quickly on, let's skip this. Anyone wants to talk about Apple product launch? Actually, it wasn't a product launch, even if they call it as a product launch. So I listened into a summary, 20-minute summary of what all happened, which was basically a compilation of all executives coming out talking about their products. To me, it didn't look like a product launch. It was more of an engineering launch. So as if they were explaining to the crowd, which is very tech savvy. They were talking about, I don't even know some of the terms that they were using, right? Refresh rates and some sensitivity numbers and all that. So it was because there is nothing new product. So all you can talk about it, 4x the latest model, 5x the latest model, my refresh rate is so much, the zoom size is so much. So it's more of an engineering, how much of the latest chip, the 2 nanometer chips, or how much power we are packing into it. There was, from a product perspective, very few things which I liked in their launch, right? But they revealed a new model of iPhone, which is iPhone 17 Air. It will start at $1,000. Only thing that changed was on the Pro side. Now the base Pro model will start from $1,099, which is a bump of $100 from 16. 16 Pro starts from $999. They bumped it. The base price was bumped by $100, right? Pro Max base price has not changed. So again, I mean, there are engineering technology improvements in these stuff, nothing, revolutionary. So you got iPhone, iPhone Air, iPhone Pro Max, watch. One thing which I found more important in watch was with the hypertension blood notifications, and I think they received FDA approval for it. So this could be a reason for someone who wants to maybe monitor their blood pressure to buy a new Apple Watch. Again, other than that, yeah, it's a little faster performance. We got a S10 chips, whatnot, but no changes in the pricing. AirPods, one thing which I really liked as a product enhancements was that it supports a live translation, right? Which is going to be huge. So if you own some of the stocks which are like whose business model is translation, I'm pointing to you, Duolingo, this could spell as a trouble, right? If more and more people adopt AirPods, and that I don't need to learn a new language, right? I can talk in my own language, and my iPhone will basically be able to display it, real-time translation. Or two people who they own their iPods Pro 3 can be talking in two different languages and having real-time conversations, right? So this is one which I really found it something new from a product perspective, right? Other than that, yeah, there were like upgrades here or there, and no change in the pricing. So overall, I mean, I don't know. Apple is great in terms of marketing and hyping the event. For me, it was like so. Nothing great that came out of it. And why not? I mean, the iPhone has been now around for almost will be 20 years. It was introduced in 2007, if I recall correctly. It's a mature product, right? And they want to milk it as much as they can before before it gets into its a declining curve. So I think the stock, the street also wasn't much enthused by it. The stock was down 3.5%, but I mean, it still generated a lot of cash. The company still a lot of cash, and of course, we didn't hear anything around AI, etc. Right. So that's on Apple's side. Let's skip the Tesla stuff. Chinese. Over the past, I would say almost July, August, there's a lot of positive news that I see on the newspaper, especially on the Chinese newspaper, South China Morning Post, in terms of what the government has been doing. And again, it's not that it's the first time that they're saying this, but there are a few positive factors that I'm seeing in the Chinese market is around the property prices have either stabilized or in some regions they actually start to increase, right? So if you go back over the last 2-3 years, the whole Chinese economy has been in doldrums because the property prices had crashed. Right? And a lot of these big developers had to file for bankruptcy or they had to get a government protection. So those developers are now are able to either raise money at a cheaper prices, and the property prices have been stabilizing, which is good from China as a consumer perspective. Also, the government has been focused on increasing the internal consumption because of all these export tariff and all that. They just can't depend 100%. They have to reduce their dependency on the export to grow their economy. And the government has been taking a few measures to increase the consumptions. This is not the first time. They've been talking about it for 2 years, and on and off, I'll see some stimulus being introduced in the market, right? So keep an eye on the stuff like Alibaba, FXI, KVA, especially Alibaba. There's a lot of positive news that I see around Alibaba and how it is competing against some of the other competitors like Meituan and JD.com. There's been a cutthroat competition. And also Alibaba's a lot of positive news coming around with their Quen model, which is like a chat GPT, but from Alibaba. So and there's a good uptake of these models in Asia market. So I'm a little positive around some of these Chinese stocks, Alibaba, FXI, which is their you know, 50 is a China large cap. If economy improves, should do good, and KWeb is an internet economy. So just want to give an update. China maybe seems to be turning around. Right? But again, we also have the geopolitical tension and the tariff related stuff. So that risk is still there. But within China over the last 2 years, there are a lot more positive news which is happening now than in over the last 2 years. Okay. We got what, 10 minutes? All right, let's quickly go through the crypto, and then I'll have to jump off the computer. I'll probably dial in from phone on the breakout rooms, right? Fear and greed index, nothing much difference. Sector wise, like S&P is close to 12%. And communication, the tech is still ruling. Then the industrial and the utility stocks, buy or sell this week. I added little more to my Mercado Libre position because the stock was punished, I think 5% on the news that the current president in Argentina, Javier Milei, his party lost. I think there are some other regional elections going on, whatever. So which was like 5%, it was down. So I thought I'll add a little more. What did I sell? I sold Shopify because I had a covered call on it, took a loss on the call, bought back the call, sold some shares at higher prices, and now back into it through a strangle. So nothing, no change in thesis in any of these companies, but some of the opportunity that came across this week, I made these trades. Crypto side, crypto look positive for this week, and Bitcoin is back above 115K, and I think Ethereum was up to 44.8K, 4,800 some part of a time this week. But I took a screenshot at 8:15. So this is where we are. From I think the last week it was like $3.95 trillion, and now it's like 4.18. Doesn't really matter in bigger scheme of things. So we saw some massive inflows coming into both the Bitcoin ETFs as well as the Ethereum ETFs. So if you look at, I've changed my vehicle for Ethereum ETF from ETH. So I used to do ETH, right? And then I found ETHA to be much better vehicle for, trading options on Ethereum because it has got much tighter spreads, right? If you look at ETH, the spreads are not that tight, right? Not too much of a difference looks like, but I find a lot more volume in ETHA than in ETH, volume and open interest. So I switched from trading from ETH to ETHA. Okay. So this has done. This week was a good week for ETHA, as well as my other favorite ticker for a crypto related trades is IBIT. Yeah, good week for both of them. Right. New company Gemini, which is a crypto exchange company. It became IPO and trade under ticker symbol GEMI. So when I searched for this symbol, I was shocked to see. I'm like, where does it say Gemini Exchange? So the name is like Gemini Space or something like that, right? Gemini Space Station or STA. I don't know. But that was a little surprising for me. So I had to double check. I'm like, is this the same company? Is there the crypto exchange, or is this a different company? Because the name says Gemini Space. Anyway, so that Gemini had its IPO. So it looks like IPO season have been opening up. We have had some good IPOs this year already. There was another company in the crypto stuff that what IPO it was what Figure. It's not that Figure the robotics company, but this is a company that is a fintech company that offers products and services like say loans, etc., which are backed by digital assets. I know only this much. I have never looked into the company, but while I was trying to find out what else happened, saw a headline that Figure also IPO'd in the market. So now we are seeing a lot more companies which are natively on the trade on the crypto tech, blockchain, etc., coming to IPO, right? So prior to that, we only had a Coinbase. But if we want to invest in natively in a crypto economy, Coinbase was the only stuff that we had. But good to see a few more companies coming into the public market, right? What else? Ripple SEC finally, this has been a battle that's been going around for years. Looks like finally they decided enough is enough, and let's bury the hatchet and move on. So what does they did to XRP? Okay, no wonder XRP is up 12% for the week. What are the this is very important. So Nasdaq is now looking and basically proposing a rule to how to tokenize the general stock trading that we do, right? One of the big promise or big tailwind behind this whole crypto stuff, crypto economy is tokenization of the assets, right? The real world stuff that we trade in, tokenization of securities, etc. Right? So far it's been only the crypto native companies that have been talking about it. Right, we're gonna tokenize real estate. We're gonna tokenize art. We're gonna tokenize, like we have had this whole NFT mania of 2021. Right, we're gonna tokenize everything. We're gonna tokenize and sell securities, which Robinhood tried to do, and then had to walk back a little bit, tone down it after OpenAI said, "Oh, this is not from us." Anyway, coming from a Nasdaq, it's a big deal. Right? This will make the operations much faster, settlement rates much faster if they can tokenize it and basically move on to the new tech. Like crypto runs 24/7 with almost instant settlement, etc. Whereas on our regular securities, the settlement is still T+1, right? So, but this is a big news, very positive news for our crypto economy, that now the traditional exchanges are saying, you know what, we're gonna tokenize the securities. And also, I think there was another positive news that the SEC is also trying to propose the rules around how these traditional exchanges can sell you Bitcoin along with the Apple stock, right? So merging of the TradFi and the crypto is, it's a good to see. We've been talking about it. We've been tracking it over years. We have a crypto economy and the traditional economy. So good to see both of them merging.
Actually, Nasdaq put $50 million into
Gemini.
Gemini. And basically, they are into the tokenizing of the stocks. They're doing that too, and tokenization of the crypto. And I think that's a strategic position Nasdaq took. I think they might be using Gemini behind the scene eventually for all the tokenizations.
Yeah, possible. I mean, it's so heartening to see that, you know, and I expect the other companies will also start using this to reduce their own internal costs. I know BlackRock has its a money market fund on Ethereum. They were the first one to do it. I think 2024, or was it 2023? But I expect more and more companies to open up their eyes to this new, potentially, you know, new tech to do the stuff better. All right. I don't think we have time for to go through the buyback checklist, so we'll do it next week. Let me see any other questions. before we open up for breakout rooms. Wow, a lot of folks talking on Oracle. Is Oracle becoming the next Tesla? You can love it or hate it. Okay, we see. OpenAI can make OCI use their TPUs. They're designing with Algo and other three LLM have their other three have their own LLM and TPU. Oracle has no LLM, which is true. Okay, gamers are more likely to buy. Asif, yeah, great comment. You know they have ran out of things when they say at atomic level. Yeah, exactly. They were getting into, and I only heard the summary. Someone on a YouTube had given a compilation of like under 20 minutes, know everything about this. And in that, a lot of stuff was a lot of techie stuff. I'm like, geez. Aditya is asking how many people here with an iPhone that will have their next phone as iPhone. I mean, I will have it, but I'm not going to rush out and buy a new iPhone. The one which I currently have is good enough. I mean, right now I have an iPhone 15. Prior to that, I had iPhone 11. The reason I had to switch to 15 was my daughter, she had lost her phone, and so I kind of handed down my iPhone to her and then got a new one. So, and I'm not gonna change it. I mean, this is good enough for my work. And I think that's what even Apple sees, that people are hanging onto their phones for longer, at least for 3 years. And they think that if people change it at 3 years, I'll probably be even slower to change it. My current phone is good enough. All right. So with that, let me open the breakout rooms because I'll have to start driving now, and I'll join in through phone. So I see Shri is here, and as always, Shri, thank you for I'm volunteering you to be a co-host so that I can get out of meeting without dropping everyone else. And I'll make you co-host. I'll get into the car and then I'll join again. So thank you everyone for joining in, and we'll talk again next week. Maybe stock market will have again a new all-time high. Who knows? But we'll see.